So welcome to today's webinar, The Emerging REIT Opportunity in India, an alternative way of investing in real estate. So this is being hosted by the CFA Society India. And REITs, as you would be aware, are very much in the news, especially in this part of the world, with the recent Mindspace IPO coming out and with the stellar results that the Embassy REIT has given recently. So let me take a moment to welcome our audience from around the world joining us remotely. And thank you for joining us, all of you. Let me introduce you to myself. I am Sandeep Gupta, CFA. I head the fractional investment division at Magic Bricks, which is a leading real estate portal in India. And I will be the moderator for today's webinar. And before I jump into the exciting session that Lars and Max have for us, I have a few housekeeping notes to announce. And today's webinar is scheduled for 60 minutes, including question and answers. So while we will be having time for the question and answers at the end of the session as well, if there are some good question and answers that come in between and are relevant for the flow of the event, I'd be happy to take up with Lars and Max in between as well. So do keep the question and answers flowing. If you see that there is a Q&A tab at the bottom of your screen, do keep the questions flowing in. And post this webinar, we will also be sharing the presentation. Lars has been kind enough to allow us to share it with everybody. And so now I go ahead and introduce Lars and Max to you. So Lars, as you can see, he's the ex-CEO and chairman of ECFT Group and has more than 35 years of experience in strategic consulting, mergers and acquisitions, project financing, and investment management. He has experience in advising on developments in international business units in Europe, US, India, Middle East, and Asia Pacific. So while we will get an international flavor to the REITs, how it is done globally, he also has extensive Indian experience and is the right speaker for us. We also have with us Max, who has proven expertise in fundraising strategy and investments with vast experience in the private equity field globally. He has extensive experience from real estate companies and is a great believer in cross-border strategies, matching Nordic technologies with fast-growing markets. So that's about it from my side for the time being, and I hand over the session to Lars. Over to you.
Thank you. So I will open up the presentation right away. And hope that everybody can see the screen. So thank you for taking the time to listen to this presentation. On this first page, in order to ensure that all questions are being answered and any more private question regarding to your own interests, we have set up a scheduling page on the web at www.ecftgroup.com, where you can sign up for a free meeting with Max and myself to discuss your particular interests. I'm going to show you about 40 slides, and that is supposed to take 30 minutes. So the tempo will be fairly fast. The slides contain quite a bit of detail, and the intention is to give you an overview and the conclusions from each slide, but for you to have something to read and study after the presentation. And that's why that meeting follow-up form is being created. So I will start the presentation, and the building on this slide is actually the office, and that's where I'm sitting right now. I can also tell you that in Sweden we have 24 degrees, which is fairly hot for the Swedes, so we are all suffering. After 17 years in India, I know that 24 degrees is nothing. We are going to talk about REITs, real estate investment trusts, from three perspectives. The investor perspective, if I'm a retail investor or if I'm a family office, would like to allocate part of my portfolio to real estate, and where REITs are having certain characteristics that can be of great interest. as an asset holder, because a REIT is also a way of securing availability of funds. And for the asset manager who is managing either real estate assets or other kind of assets and want to deploy some of those to real estate. But first we'll talk about a little bit what REITs are, how they are different from others, why this is relevant to India, and Sandeep slightly touched why two foreigners are talking about the Indian context. So a little bit background on us, you can understand where we are coming from. ECFT was founded 1991 in Sweden. Today we are covering a large part of the world except South America. I've been in India since 2003, primarily out of New Delhi, but I think I've done business in all states in India actually. We've been doing strategy, structuring, business development, project development nevertheless in India, and especially in the real estate sector. We've been providing a great deal of investment banking advisory and cross-border advisory. And that's been a very, very interesting and successful period of our evolution. We started our business in that green building on the slide. I have been doing this for about 30 years. I spent 17 years in India and did approximately equal amount of time in the US and Europe. We have completed about 22,000 crore of transactions actually related to India. And the first REIT engagement was year 2000 for one of the world's largest insurance companies who wanted to allocate a large portion of their assets to REITs and a major portion of their real estate assets to REITs. And we actually helped them doing that. It was new to them and it was new to us. And we had to do a lot of facts finding and finding ways of getting structures and other things going. On the top left, you can see one of the first development projects that we have done. It was a $2 billion project in Sweden. And you can see it was based on buildings from 1524 and onwards. And at the further part of the shoreline, we developed new properties. Max current project is down to the left, which is a residential project for special needs people. And in the center is actually the foundation for coming REIT in India. It's a REIT focusing on warehousing, and this is actually one of the largest warehouses in India, and it's part of a 15 property portfolio, which is more or less being put to place the final pieces now. And we were the advisor on that, doing everything from acquiring land, securing the financing, setting up the structure, very grounded work in India and very educational from us. As you know, acquiring land and getting all the permits and all these things require some certain skills. So Max, he is the one of us who is the expert of structuring funds. And he's actually been setting up 3-4 funds the last 18-24 months in different sectors with different specialities. So he is the ideal person to discuss about these kind of things. Real estate in a perspective. If you look at the S&P 500, which is the US side of things, real estate are only 2.8% of the total value of S&P 500. So it's a very, very small part. That also means that the advisory side and the asset managers who are very, very competent about real estate, they're actually quite few. Real estate investment usually is either that you invest in your home or your operational buildings. You do a direct investment by buying property and holding the property, developing the property typically over many years. You can invest in real estate mutual funds, which is like investing in any mutual fund, or you can go for a private real estate fund, which is more open for the larger investors with an ability to deploy a longer capital and who are happy with the kind of investment vehicle a real estate fund is. And then you have the fifth alternative, which is a REIT. A REIT is a company that is holding real estate and making money by earning rental income. And that rental income is distributed on a monthly or quarterly basis to the holders of the shares, the units in the REIT. During the life cycle of a REIT, the REIT can also sell off assets and by that earning the value appreciation of the real estate. The difference between a REIT and a private equity real estate fund is that the real estate fund is primarily making money from the exits, and you don't have a cash flow over the duration of the holding, but you can have a significant value increase at the exits and at the tail end of the fund, which means that there is a certain degree of uncertainty and there is certain lock-in effects. The REIT, as mentioned, is providing exposure to the income and the profits as you go and at the time of exit. Plus, there is regulations that ensures the downside of the investments, which means that you cannot leverage more than 50% in India and so on and so forth. The history of REITs is such in the brief format. It started in the United States during the 60s, and a number of different kind of REITs has been evolving over the years. Today, there is more specialized REITs, and they're also the ones returning best. In India, REITs were allowed from 2014, but it's just in the recent, call it 1 year, that we have seen major activities around REITs, and we will come to one of the reasons why that is so. Today, REITs are available in approximately 35 markets around the world. When you're looking at the REIT sector, one have to be aware that the REITs are typically very specialized. And a trend is that the REITs become more and more specialized over time. And this is because of the sophistication of the investors who are looking for pieces that they can stick into their portfolio, which is having a specific effect on the appreciation and the risk in the portfolio. And this list is basically a list of the evolution. On the previous slide, you can see how that happened in US. What Max and I see being active in the market is that the next thing coming around the corner is distributed green energy, distributed microgrids, and power balancing estate, which is basically storage in terms of hydrogen or batteries or other ways of storing energy over production and the consumption cycles. Interestingly enough, there are such investment trusts in place in India already. And with the large installed solar capacity in India, we believe that this specific niche will be of particular interest in India, especially for them who want to develop something themselves. Specialized REITs, as you remember, 2.8% of the total capital on SP 500, but the specialized REITs, they're actually more than 50% of that value. The different kind of REITs, equity REITs, which are typically the listed ones, like we have two in India right now. Mortgage REITs providing financing to the real estate sector. Public non-listed REITs, which are governed by the regulatory framework in respective country. And private REITs that you can actually see like a company where you're buying into a share and being managed by a private organization or owners or originating with assets. And that's a common way when Max and I enter into new markets and setting up REIT-like vehicles, to start that way, build the asset base, and from there continue to formalize the REIT structure for listing. So why should you invest in REITs? I'm not going to teach you portfolio theory. This is cut and paste about some practical rules thinking about portfolio. But REITs really become interesting when you think in terms of portfolio. And everybody who's involved in asset management know that the portfolio strategy and the composition of the strategy can significantly reduce risk and increase the return. And in that context, REITs become very interesting. REITs tend to behave similarly to the stock market. So here you can see Nasdaq, S&P, and you can see S&P Real Estate Sector Index that started around end of 2016, where there are some correlation, where the real estate sector, REITs and non-REITs, is not having as an aggressive increasing in value. This is if you look at the sorry.
It's also interesting to mention here that by REITs correlating with the index, REITs in general and prices are typically compared to treasury yield, typically move in opposite directions. So that's always important to have in mind when looking at investing in REITs.
That is correct. And the other thing is that in this chart and in many comparisons, the dividend outpayments are not accounted for. And you will see in a coming slide that's significant portion of the return from the REITs. It's regarded as a defensive, non-cyclic investment. And weighting it all together, the risk-reward profile of a REIT position it basically in the middle of the chart in terms of risk and in terms of returns compared to any other alternative investment. It's a long-term performance investment vehicle. It's a substantial, stable dividend yield-paying instrument, which means that it's predictable. It's liquid since it's traded in the market. It's a high degree of transparency because the assets in the portfolio are stable. The transparency is high, and the regulatory framework is making it more difficult to change without the shareholders being aware of what's going on. And because of the specialization, there is a great degree of diversification. So, clear exit path, profit distribution over time, security of cash flow, and leveraging protection because of leverage rules and rules about degree of project under development and so on and so forth, which we will come to a little bit later. If you want to invest, it's not very different from any listed security. There is a lot of options. There is a lot of markets. Some has been around for a long time. The acceptance is very, very high, like Ireland, Netherlands, US, and so on and so forth. New markets like UAE, which is liked by many Indian investors, or Hong Kong, is coming in lately, and the REITs there are doing very, very well. On the chart to the the lower right, you can also see that the returns are quite good. A little bit higher risk, a little bit higher returns, but UAE is right now doing very, very well. India, Today, there are two listed REITs in India. One is Embassy Office Parks. The whole process led by Blackstone. They have assets for about $3 billion US. They listed about $700 million US. They have been performing very, very well. And that success led Blackstone to also introduce Mindspace Business Parks just about 10 days ago. And that introduction has also gone very well. It was fully described. And the share price went first up from 275 to 302 rupees per share. And it's been stabilizing surprisingly fast in the market, as you can see on this chart. This is not stopping Blackstone. This is the share price as per yesterday. Let me go here. So Blackstone is right now looking at buying out a very large real estate portfolio in India. And the plan is to create a REIT out of this also. So besides the 3 plus 1.6, they are looking for another $1.7 billion to be put into the Indian REIT market. The REIT market in about 5 years is predicted to be about 29 to 35 billion US dollars. So we're talking about significant money. I will go back here. The performance of the Embassy Office Parks, the first REIT where we have one annual report released, has been quite well. Total returns has been 25%. They have paid out 19 billion rupees, and they have been paying out 99.8% of all income. That is partly due to the recession in the market, the dip in the market because of the virus. So they have compensated some of the loss in this curve with dividend payments to give a good return to investors. And this is a very typical behavior of the REIT managers because they want to keep that steady flow of cash to the investors. I really recommend you to download the Embassy Office Parks annual report. It's a good summary of what a REIT is. It's a good example of a well-designed financial product. And there is a lot of learnings to be drawn from that document in itself. I mentioned earlier that what we see is an orientation towards infrastructure. And I just want to point out that the KKR, another American investor, private equity firm, they are involved together with Sterlite in India Grids, which is also a good example of an infrastructure-oriented vehicle that we foresee will be becoming more of in the future. And you can see that actually from the outbreak of the virus, the infrastructure side have had a better appreciation than the real estate side. So that's the general background about REITs and a glimpse of where the REIT market is sitting in India. So the question is really, is that something that I should be interested in, that you should be interested in? Well, it depends a little bit on who you are. I'm of the opinion that there is a huge opportunity. And if I said it, one should maybe consider whether it's valid or not. But having Blackstone and KKR being two of the 5 largest asset managers in the world, seeing India and the REIT market in India as interesting, I think there is some validity to that statement. The market in India is slightly different from US and Europe. The challenge in India, where also the opportunity sits, is the aggregation. There is a lot of good properties. There is a lot of portfolios out there. but they are placed in structures in such a way so they are not easy to access. And if you talk to the big real estate dealers, investment bankers in India, they will also tell you that access to assets is the major challenge. So if someone is sitting as an advisor to a family office or an industrial organization or an industrial family in India, they typically sit with large portfolios distributed in their operational structures. And there are enormous values. But there is no foreigner who can go in and convert this into a portfolio that is investable. And we've been looking at a number of cases, somewhere between 5 and 10 in India, where this is true. The money is not the problem. We are talking to Europe's largest asset manager who is having money they would like to invest into India. And we are talking about billions of euros, billions of dollars, but the assets needs to be brought up on the table to be able to do that investment. And this is actually what Blackstone has done through their establishment in India, which I believe is something between 15 and 20 years now. They spent that time learning the market, building the relationships, and identifying the assets. If you're a developer, asset owner, and asset manager, the criteria why you should be interested is a little bit different. In India, I think that developer perspective is in particular interesting. It's a way of raising money. And we all know that most real estate companies in India today are suffering. They are suffering in terms of access to debt. They are sitting with debt that they need to serve. They are sitting in a crunch. So there is a lot of assets out there and a lot of developers needing money. And that is actually an opportunity. It's a way of deleveraging finance because the cost of capital bringing in REIT investors into REIT is much lower than getting debt from a bank in India or even foreign banks, especially if you add the hedging to foreign funds. It increases the market value. And Embassy is a typical example of that, where the value increase of the assets at the peak were 35%, right? So the market put the cash flow aspect, the dividend aspect into the valuation of the assets in a much more transparent way, and transparency pays off in terms of valuation. It's a way of getting money to buy more assets and more companies holding assets. It's actually a way of attracting employees in a market which is, because of the small size, quite difficult to get the best people, because you can give stock options and you can give other incentives, and it becomes more a financial industry kind of business environment which will attract these people rather than a building construction development environment. And of course, a listing will give you exposure, and that will lift your brand. I'm not going to go through this in detail because we are in one way running out of time, and I also think that it's quite easy for you to digest. It's well defined in India what the REIT is. It's well defined about the thresholds. I was mentioning on the previous slide that we believe that the sweet spot is $200 million or more for a listing, and that's correct if you're going to attract international investors. But the regulatory framework in India is saying $72 million, which is the 500 crores. And there are some other conditions in India, which is slightly different from the numbers I've been showing on some of the other slides, which are from Dubai and US. But this slide is summarizing that. You can read for yourself and revert with questions if you have. Asset owners, I'm rushing it a little bit. Financial incentives, means for growth. There is a lot of non-monetary factors like efficiency, and there are tax benefits. The tax will be spread among the different stakeholders in the structure. It's also a way, as I mentioned earlier, to attract cheaper capital, which means that the return on your business, the cost of capital, the profit will turn out better. I'm not going to sell the idea of an independent REIT manager, but the experience from US and Europe is that independent management teams, they tend to get more credibility, they have easier to place the REIT, and they are easier to develop the assets because of neutral. To get the REIT listed, the first part is the difficult part in India, is the asset aggregation. When you have the asset aggregation, you can start to prepare the listing. The aggregation needs to be done according to the rules that is outlined earlier. And the preparation will take a couple of months. After that, the listing is done, and it's a tradable security. There are different parties involved in the structure. It's the trust, which is what you're actually investing in. The trust is owning special purpose vehicles, holding the real estate assets, and that's where the rent from the tenants are being collected. And that income is then distributed to the sponsors, which are the asset owners and the shareholders in the REIT. There is a trustee who is guaranteeing the management, and there is an investment manager who is managing the allocation of the money. And this is a way of getting independent parties governing different aspects of the investment to ensure that everything is being done in the right way, and the benefit of the investors are taken care of. One learning from India is that besides setting up this structure, and this we can also see in Embassy and the Blackstone setups, they have a partner who is very skilled in developing the real estate assets themselves. So they have a layered structure of management and responsibility where they are lifting the value and the rental income of all these assets. And that's an area where we have a great deal of experience. It's in many cases forgotten, but it's nevertheless very important. As I mentioned, we have been looking at somewhere between 5 and 10 real estate portfolios in India, where we have been evaluating the different alternatives for these assets. And we are talking about approximately 7,000 assets, short of 7,000 assets. And seeing that by applying the right method of lifting the value and the rental income, the yield on these properties, we could double or six-fold increase the value of these assets. And that's an Indian context. And it's a way of lifting out the value and making it visible, and also work with the physical aspects of the asset. I'm not going to go into this because it's very specific, but given the tax side, given that capital will typically come from abroad, and often there are international investors and shareholders in the REIT, the transaction structure and the structure, the vehicles for bringing in and out money from the REIT structure becomes very important. And I would say that's more in India than in any other market that I worked in. So this is one of the complications in India. I'm not a tax expert, but as I mentioned, and you can read the slide and get back to me, tax is being paid on different levels. The SPV collecting the rent from the property, the REIT trust in itself, and the unit holders, they all pay tax on their income. So that's an aspect to look into, and that layered structure. This is my last slide, and this is basically listing what we have done in India in the past, and where we could fit in a team with local participants who want to invest or want to set up a REIT or want to aggregate assets, because we have been doing work in all that sequence, from the asset allocations to the strategy, the financial product, and to preparation of listing. And then we work with the local partners for the actual listing. And that's it. Thank you very much for listening. Questions are welcome. Sandeep, your microphone is in mute.
Yeah, I hope I'm audible now.
Yes.
So we've got a number of questions that have come in, Lars, and I would request the audience to continue shooting the questions as we go along. So one big question that has come multiple times is that what is the total returns that one can expect in an Indian context, especially given that the yields in the Indian context, typically the perception is that they are lower than the capital appreciation. Most of the total returns are coming from the capital appreciation. So what is your perspective of total returns in an Indian perspective?
Well, we only have 12 months track record and one REIT. So it becomes very speculative to have an opinion about that. But actually, Embassy has been performing better than foreign REITs. I think that can be partly contributed by this being a new investment vehicle and the only investment vehicle. So it's been having a lot of attraction to informed investors. But I would expect that the returns will be going down from maybe 25% like it is today to in the neighborhood of 15, 16, 18%.
That's a great return, and yeah, compared to the other sets. So another question that had come in is, given the COVID that has come in, a lot of the assets that were there are the rentals are being renegotiated. A lot of companies are vacating the offices. What do you feel is the impact going to be long term and short term in terms of the future of REITs in India?
Well, that becomes a question about what you believe in terms of real estate. That will be a personal opinion from my side. And I think that the office sector is going to be hurt. I think the real estate related to retail will also be hurt. And I think that hotels will definitely see a decline. We can just see on the number of hotels being for sale worldwide, actually. But real estate related to warehouses, like where we've been working, or when you come into infrastructure sector, it's been very popular in the past to invest in mobile network towers, for instance. That is have a slight decline, but we have been pointing at energy storage, local distribution, microgrid, and local generation of power related to real estate. And just to underline the belief in that statement is that Max and I were actually ourselves setting up such a fund, not in India, but in US.
I think it's also good to consider, of course, when income decreases, price decreases, and of course the benefit of having a rate, you could typically invest through different types of asset classes, like hospitality area, residential, office space. There will probably be challenges in the market, but it's still you still need to pick out high class real estate to be able to really deliver good results.
Absolutely. And that brings me to the next question, that globally in the total return that is generated by REITs, is it through the income generation or is it through the asset turnover capital appreciation? Which
income
is...
Yeah, income generation. I think you had a slide on that, Lars, didn't you? I think that the rates on the SP 500 yields in average around 5%, and compared to the average stock on SP 500 yields less than 2%.
And if you had a crystal ball, what would you feel that number is going to be for India, which is historically a large capital appreciation market versus a income generation market historically?
I mean, what we see and the large investment banks that we talk to, they believe that there will be a higher deployment of money in real estate. And we believe that REIT is a very good way of investing in real estate and also having flexibility. And therefore, we think that the returns will be sustained at the level we have seen, right? So if you see an appreciation of the share value of a few percent, 2, 3, 4%, and the dividends being approximately the same, I mean, you will be looking at 9%. And when I talk to people who are specialized in asset allocation in a portfolio context, they tell me that it's very, very difficult to break a 9-10% return if you're not very, very specialized and you increase the risk level in the portfolio. So that positioning of the REIT in the middle of the chart with the Lakshmi, I think that will stay.
Sure. So like someone has rightly said, money in real estate is not made at the time of exit, but it is made at the point of entry. At what price point do you enter at? And at what price point are you getting good assets at? So this is that question someone has asked, Rahul has asked a question that given the experience in the Indian markets, how can investors safeguard themselves against aggregation of assets in the REIT at inflated prices in collusion with the valuer?
I don't have a good answer to that. If I had, I would be competing with Mr. Ambani about the richest person in India. No, but my experience is that that's very situation dependent in India. But what I'm seeing, given that there are so many developers holding assets and having difficult to get new loans and financing, I believe that real estate prices will go down, right? So I think that's why I'm also urging the audience to think if they have ways of aggregating assets, or if they know about assets that can either be secured or be acquired. This is the time, and the next coming 18 to 36 months is going to be a very, very good time if you have the money. And money is waiting outside the border.
Interesting, because someone has asked, given the difficulty of aggregating assets in India, which you also covered in your slides, in case was I audible?
No.
Okay. So I will repeat the question that given the difficulties of aggregating assets in India, despite having a lot of good assets, what do you expect would be the size of the REIT market in India? And also, what is the kind of investment that is looking to enter into Indian real estate?
So having spoken to others, you know, this is a way of escaping the question, right? But ANAROCK and JAL and the big parties in the Indian real estate market, they end up saying that the REIT market in India going forward will be somewhere between 29 and 35 billion dollars. So that's significant. I don't have a better number because we are not data driven as they are. We know what customers say, we know what we learn from the deals. We're not sitting with a huge databases, but they are pretty agreeing pretty much on that level. So call it $30 billion. And $30 billion is not a problem. Again, it's the asset availability that is the challenge. And I think that can only be fixed by the Indian investment community.
Sure. And that is also a question a lot of people have asked, is why only 2 REITs have been listed in India so far. And I think that is probably a reason that more assets need to come on board.
Yeah, I mean, it's asset allocation that I know personally from a Blackstone, but we all know that the Indian environment is complex. And when you do big things, you have to do it right. So I know that Blackstone has done a lot of homework, a lot of due diligence, have had a lot of advisors involved. Actually, the best guys in India has been involved in one way or another to give their view and their advice how to make this happen in the right way. So that has been a learning curve. And this is why I'm saying that we did very good. Not I, these guys did. 2 more is coming very, very quickly, and we will see more. So already 6 out of these 29 billion has been taken by Blackstone. They're eating this market. It's very impressive.
And given that you have experience of REITs both globally as well as you have done a little bit of work in India as well, are you satisfied with the taxation and the regulations of India vis-a-vis the global practices?
Yes, and you can see that on the tax slide, that the tax is not a big burden actually, not for any of the parties involved. There is only one market that would be better, and that would be Sweden, because taxation of properties are much, much lower. But we are not allowed to set up REITs in Sweden. We are still lagging. But from a tax perspective, India is not bad off.
Sure. So there are numerous questions on how can one create their own REIT and how do I set up my own REIT. So what we will do is, Lars has graciously given a link which we will be circulating where you could reach out directly to them with more details, because this entire 1 hour was spent on how to create a REIT, what are the benefits, but in case you need more details, you can directly reach out. So I would not want you to repeat how do you set up a REIT again, because you covered that in your slides. That is why we were here. But I understand that it is a little complex for the first time. So you could directly reach out to Lars and Qualstorm. We will send out the link where you could kind of directly connect with them. The other questions are, how does India compare with respect to cap rates vis-a-vis the global markets?
Cap rates in terms of interest rates.
Asset valuation, cap rates, the multiple at which, the rental multiple at which the asset is valued.
I'm not updated on that. It will only be guesswork or general answer. I don't have a good answer right now.
Sure. And again, a question that is close to most of the attendees' heart, including me. What is the scope for CFA charter holders in the REIT market in India or internationally? Where can we make our careers in REITs?
I mean, I think that also a question that should be fairly individual. I mean, the way we operate is that we set up project teams. This is the way why we've been able to cover such a big part of the world without having a huge organization. So we are about 45 senior people covering different regions, setting up teams depending on opportunities. And any interested, competent, and engaged individual are welcome into these teams so that we can always discuss. We have lately been working with the capital side to secure money going into India. And that's why this seminar became so timely, because what we will do now going forward is to identify partners in India having access to assets so we can deploy that money, right? So there is a lot of scope for collaboration and working together and making money, where we are also flexible about the role, and we are willing to share our experience. So let me go back to the form that you mentioned. There is different choices of what you want to do. So you can select a free 15 minutes just to get a chat with us on a scheduled basis. And there are other alternatives where there is 1 hour conversation. It's all for free. So you just book a time and we will take that. You decide what time you need and we will accommodate that, and we will take these more specific questions for depending on your context. Read the slides and get back to us, and we'll see what we can do together.
Perfect. And just to share my experience of charter holders and REITs, just to share with the larger group, we have senior charter holders in most of the REITs in India, including in the embassy group as well. If you reach out to me, I could introduce you to them as well. So there is a lot of scope for charter holders in the emerging REIT scenario in India as well. A lot of the developers value the CFA charter holder for positions that are open with them. So The other question is, how do you value the REITs? So what is the best way to value the REITs?
I think it's typically same as you would evaluate a real estate fund on the net asset value.
Sure. So it's a DCF plus the asset plus, or how would you?
Yeah, and then you also weight in the net asset value.
Absolutely.
Yeah.
Sure. And there is a question that has come from HM that, do you know if any study of how much real estate the listed companies hold on their balance sheets? Because like you mentioned in your presentation also, that could be, that could give an idea of the potential size of the REIT market, because a lot of the companies have a large portfolio of real estate. Has anyone done a study on that?
So as I said, I am not aware of a public study done even by the big advisors like the ones I mentioned earlier. But we have seen when we have been looking at companies, and that's all from Birla to Mahindra to Britannia to a few companies, and the situation is quite the same. I mean, we all know who have been to India. The two traditional ways of investing your fortune is in gold and real estate, right? And most of this real estate has been depreciated to zero value. So the books are not even showing the real value. So you can see zero value, but you have a long list of properties. And when you start to put values on these properties, you get amazed. So there is a lot of work from the ground level. And this is why I'm saying corporate accountants and CFAs are in an excellent position to identify these kind of assets and bring them up on the table, make it visible for the owners, and then have a discussion with them. How can this asset be used for accessing capital and so on and so forth, like mentioned in the slides. So you really need to have that insights. And this is what foreigners lack. I were invited for different means for other relationship with these companies and had the opportunity to see, but most foreigners will not. And this is what's missing, and this is why I'm saying money standing outside the border, right? But the Indian side needs to respond, and there's a lot of money to be made on the Indian side.
Absolutely. So I can personally vouch for it. I worked in corporates in India. They're sitting on piles of real estate at extremely high valuations. And if someone could kind of unlock that value, and that would really be a great way to push this. So people have got different questions. Is it a good time to enter into REITs right now, considering the given situation? Is it not the right time to invest in REITs? So what is your opinion on that?
Well, since I'm talking about it and love it, I think it's always the right time. so I'm not the right advisor. My sincere advice is it's definitely a sector to start looking at and understanding. I hope the slides we're providing is an introduction to that, and that we can start a journey together, but at least start to watch and learn and decide on the timing yourself. But I'm also a strong believer that since this is long-term investments, over time, timing will be less important. This is not something you trade every minute, every hour, every day. You will be sitting with these components of your portfolio for quite some time. So there is no hurry, and there is no reason to delay.
I think that's a good point also. Even though many REITs are, I mean, has a lot of liquidity in them. It's typically, I would say that investing in the long term would probably be more ideal when investing in a REIT, since you need to consider the risk-free interest also and risk-free returns.
Sure. So the younger you start, the longer you can. So a lot of questions have said that I'm 21 years of age, should I start investing in REITs? So I would answer that like what you just said. Yes, the longer the time frame, the more chances you have to make returns. And some other questions have come up, like there are a lot of mortgage financiers in India. And for example, the HDFC group, there is a rumor that they're also looking to participate in REITs. So there is a direct question, have you heard anything about it?
Not more than that. I mean, there is a lot of rumors. I have chosen to display the ones that is out in the market, and there are some more facts. I mean, I can give you 5 Europeans who I know are actively looking, and 2 of those we are advising, right? So yes, there is a lot of work going on behind the scenes. Who will be the next to enter, and to what degree and with what amount? I don't want to speculate about that. But we are going to see more. If we have seen 3 the last 18 months, we'll probably see the 6 the next 24 months.
Wow, that's a nice number to look at. And I think we've covered this earlier, but there is a question that from Ashish that Infosys loves creating real estate. They have a lot of class A real estate, which in Ashish's opinion, they should not be owning. Can they do a sale and lease back to a REIT?
Yeah, they can do, but the preferable structure would be that they place their real estate assets in a corporate structure, and that is then being converted into a REIT, and they will get all the benefits of owning the assets and the financial market aspect of it. So that's a typical target, and I believe that the daughter of the founder is now in charge, so and someone should talk to her.
Sure.
I actually know that she is very keen on investing in spa and recreational hotel facilities. So she is interested in real estate. So if anyone having a good connection, I think she would be interested in that, and we can definitely do something. I don't have that connection.
Sure. And I think we'll take a couple of more questions before our time is up. Am I audible?
Yeah.
Yeah, okay. So there is a question for retail investors. Are listed REITs the only option for investment? While you have covered the slide of the various ways of investing in real estate, there is also something called as, there are companies like PropShare and Strata Prop that have come in India. What is your thought on that kind of a fractional investment, which is not really a REIT, but assets with lower values created under a unlisted SPV?
Yeah. So I mean, the common route is through listed REITs because of the transparency and the regulatory aspects of those entities. Then you have the private REITs, which are also under regulatory governance, the registered ones, where you can have a decent comfort level investing. Then you also have independent companies operating like REITs, but not under regulatory screening. And then suddenly the risk increases. So, I mean, this is why the terminology about a sophisticated and experienced investor. If you know what you're doing and you know that you're investing in something which is real, yes, please go ahead, because these organizations tend to have a slightly higher return because they can cut corners. But otherwise, go listed in the first place, at least governed by regulatory regulations and registered REITs. Otherwise, that's my advice.
So there are a lot of questions that are still there on the list. I'll probably take a couple of more, though we are shooting over the timelines. And
You're welcome.
like I mentioned earlier, we can directly reach out to Lars and Max. We will also be sharing the presentation and the link so that you could reach out to them. And so one of the questions is, what are the target returns for investors like Blackstone when they make these investments?
In general, they are looking for actually an annual return of 35%.
Wow.
Because they have to return to their institutional investors somewhere between 7 and 10 times the money, right? So some things has to be really, really lucrative. They know that some things will fail, and most of the stuff will be average. So I was actually reading statistics about the 5 largest funds this morning, where the general view is that 50% of all their investments, we're talking about private equity, will fail. 30% will be average returns, which means that they will give the money back or 2 times the money. and the last 20% will have to do these stellar returns. And that's why it's so gratifying to see that Embassy in India has been given that kind of return at least the first year. First 6 months with 35%, it was actually up towards 38%. Over the year, 25%. I think they are very happy.
And I think what Blackstone would typically do, even though they acquire existing real estate, they would work very actively with, negotiating the rental agreements to be able to increase the value of the property and that type of work. So they remain, of course, as a very active manager in that sense.
Sure. So great, that brings us to the end of this webinar. Thank you so much, Lars. Thank you, Max. And thank you for all the audience for the wonderful questions that kept flowing in. I hope that this was useful. And for details, like we mentioned, you can reach out directly to Lars and Max. So, and I also thank the CFA Society for giving us this platform and the CFA Institute. And with that, I call it a day. And thank you so much. Any last words, Lars, Max?
From my side, I would really want to thank you for hosting the seminar to CFA, and moreover, thank the audience for attending. And I sincerely hope that it has been of value to you all.
Yes. Thanks all, and thanks CFA for setting this up, and looking forward to connect.
All right, thank you. We call it a day. Thank you.
Thank you.